All right, good morning, everybody. Happy Friday. It has been a honestly exhausting week, right? Very, very challenging bit of price action here for us so far. Not a ton of range, not a ton of volume, not a ton of volatility. And we have really been just kind of stacking up those base hits, right, so far this week. I asked yesterday inside our Discord basically how everyone's mental capital is doing, right? And wanting to acknowledge that, hey, this week has been on expert mode. This has not been easy. We're not getting a tremendous amount of follow through on our setups. We're seeing a ton of fake outs. We're seeing, small baby intraday ranges for four, right? For 3 out of the 4 days here so far this week, right? Without any sustained follow through. And so it's really just about understanding that sometimes the market is going to reward you, right? And sometimes it's going to reward you for kind of being a little bit more cautious and a little bit more patient. And we're definitely being rewarded for that here this week. It's been a great run of form here, trading wise, right? For the last, say 11, 12 days or so, right? 11 or 12 trading days, the last 2 weeks. We've been doing very well, basically just taking on our base hits without essentially getting the relief of hitting a home run, right? And what we have to understand is that we're not guaranteed a big win. We're not guaranteed a big loss. We're only guaranteed the outcome that we've back tested when we follow our rules deliberately, when we're so diligent and obsessive over our process that nothing else can get in the way. And yeah, sometimes that's going to be really hard, right? Like it has been this week. It would have been really fun to, average down into some trades. It would have been really fun to have ignored some stop losses. It would have been really fun, right, to have skipped some steps and to have chased price action that isn't there. But ultimately, right, that just would have been painful. It would have been a way for us to have lost money. It would have been a way for us to have put ourselves in situations where our P&L and process start to detach themselves from themselves, and we aren't able to see that sort of progress that we're looking for inside our trading accounts. This week has also been a great week to focus on that level of accountability, right? Hey, am I behaving the way that I want? Am I trusting my variables? Am I being objective with price action? Am I being responsible with my position sizing, right? Am I controlling all of those variables and setting myself up to be ultimately successful? And if the answer is yes to those questions, then okay, yeah, maybe you're not on a millionaire pace here this week, right? That's fine, not the end of the world, but you're still making money, you're still compounding base hits, and you're creating that foundation for that when markets do blast off and give us that follow through. You're going to be able to have the skills, the psychology, and the technique in place to be able to dominate the market. So to say that we should be disappointed with how we've traded is unfair, right? To say that we should be disappointed with the follow through that the market has given us would be unfair, right? We should be very proud of ourselves here for how we've behaved here in the last 2 weeks. This has been a tremendously difficult market. There have not been days of easy follow through, or there have not been easy wins. We've had to fight, scrap, and really kind of commit, right, to that process to have found the success that we are looking for. So if you want to think about how you're defined as a trader, you want to think about how you're defined in anything, it's how do you behave when things get difficult? And things have been incredibly difficult here this week. So if you're still journaling, if you're still obsessing over your execution timing, if you're still obsessing over your risk management, you're still obsessing over trusting your technique, and you're behaving like a winning trader, then you should be very proud of yourself, right? You should feel like you've accomplished something pretty spectacular, because that is something that the vast majority of traders will refuse to do. They will get too obsessed over the short-term variance of their income and start to skip steps, right? They're going to get obsessed over the choppiness of the market and say, screw it, let me go all in on this position so that I get that reward that I feel like I'm owed. They're going to start to ignore the game of probabilities to chase that short-term win. And so I want you all to pat yourselves on the back for fighting, right? For demanding excellence from yourself, for holding yourself to a standard that most traders would not hold themselves to, and for understanding that, hey, your process is forever, your P&L is a trick. And so P&L good this week, but it's been the obsession over the quality of our process that has allowed us to be green. It has allowed us to have this winning streak. It has allowed us, right, to find that sort of even minuscule success, right? So if I'm going to be thinking about my trading here this weekend, right, when I'm sitting down here this evening having a whiskey sour or a glass of wine or something along those lines, I'm not going to be proud of my P&L, because that is ultimately a trap, right? I'm going to be proud of how I behaved, of how I managed risk, of how I timed my entries, of how I journaled, of how I trusted my technique, of how I thought about my risk reward, of how I thought about my position sizing, of how I controlled myself from going on tilt. And understanding that stacking up all of those variables, of controlling all of those techniques, of being obsessive over that process, right? Of holding myself to that higher standard has ultimately been the reason why I have been profitable here over the last 11 trading days. And so today, it is about doubling down on those elements, right? It is about doubling down on obsessing over my execution. It is about doubling down over obsessing over my risk management. And it's about ensuring that I am not going to take trades that are suboptimal. I'm not going to rush a decision just because I want to feel as if I'm part of the team, right? I'm not going to rush a trade just because I feel like I'm owed more P&L here this week. I'm not going to rush a decision just because I want that dopamine hit of feeling like I'm in a chance to be making big money. All of those feelings are traps. They are not designed to actually make you money. So I want you all to fight back against those impulses and to put yourself in a situation where you can and will be green. So that is the element here that I'm focusing on as much as I possibly can here today. One thing I also want to mention, right, is about your personal execution timing. So look, no matter what we do, there will always be a little bit of latency here on the stream. Right now, the latency should be about 3 seconds. So if you're seeing more than that, please make sure that on your YouTube, you are on the live, right? So you want to make sure that there's that little red dot beside the live button inside your YouTube live stream so that you are at the most recent, least amount of latency possible. But then with your entry timing, saying that I'm in a trade should not be your reason to click the trigger, right? If your objective is to get the same entries as I do, right? To get the same price as me, when I say that I'm in a trade and then you're 3, 5, 7, 10, 30, 40, 50, 60 seconds behind my entry, you're no longer trading that same plan, right? You're no longer trading that same risk reward. You're no longer trading that same risk management. So when I say my price, like 99% of the time, it comes back, retests that price, and then breaks down, right? It's pretty rare that we get like 30 points of instant follow through without it ever coming back and getting back into that entry zone. So if your objective is to copy and follow my trades, actually copy and follow them. Don't chase them, right? There's a big difference between copying and chasing. So chasing means that you jump into trades when you're outside of the risk reward zone because you're afraid of missing the move. Copying means that you're coming back and you're waiting for it to retest my entry price and then clicking submit. So if you're going to be taking trades where they are outside of the risk reward zone or they are at different entry prices, and then you're going to be wondering why you're not getting the same performance, that is exactly why, right? So I tell you what my entry price is. I tell you when I'm trying to look for trades. And so those are your two opportunities, right? You either decide that, hey, I'm going to take accountability for my entry timing. And when I say that I'm in a position or looking to enter a position or this is starting to look good, you take that decision, right? And you jump in and you try to beat my entry price. If you're waiting to copy my trades, then actually wait for me to say that what my price is, and then look for a retest of that price and set your limit order to be at that price. You are no longer copying, right? If you're getting a price 5 points later or 2 points later or 3 points later, right? You're just setting yourself up to lose more when we're wrong and to make less when we're right. So that for me, right, is the most important element that we need to focus on here on a day-to-day basis. So if we can control those variables, we can fight back against that greed, then we will set ourselves up to be very successful and we'll do very well here trading. So with that out of the way, team, let's start mapping things out here. Let's figure out what we want to do today, and let's put ourselves in a situation to finish off the week with a bang. So good morning, Suresh, Tanja, David, Jeff, Mike, Gabe, Brian, Samuel, Daniel, Don, Salstein, Steven, John, Nate, Craig, Ruben, Cordell, Jeremy, Sammy, DJ, and Jen. Hope you're all having yourselves a fantastic start to the AM here. And yeah, good morning, team, and welcome to all DTR guests. Let's finish off the week with a bang. Good morning, Mike. So first things first, your team, what's the count on ES? Let's start there. Okay, and then we've got some data here at 10 a.m. today. Yeah, inside bar jack, spot on. And we kind of expected yesterday to be a day of consolidation, right? Because we're opening up in the implied middle of the previous day's range. So we knew it was going to take a long time, right, for us to get a breakout or breakdown above or through that range. So today, right, not too much is actually going to be changing. We're looking for a fake out, right, maybe off of that 5,800. I still think that's reasonable, right? If we get a deep pullback into that zone, maybe a little bit challenging for that to happen here this AM. But ultimately, right, we're looking for a breakout towards that Wednesday high and then beyond to make new all-time highs. And then to the downside here, we're looking for a rejection basically off of that trend line. So we'll call it 58.90 here today. And then a breakdown towards 58.50 and beyond. Make sense? All right, cool. NQ, what's the count? Similar, not so similar. How do we feel? Yeah, inside bar, right? So pretty much the same narrative here. So we're looking for basically a breakout through, right, that 2,600. And so that'll be the starting point here for any move this morning. We're about 100 points away from that here today. And yeah, still looking for that fake out off of 21. And again, probably a little bit challenging for that to happen here. But if we can break out above that range, we should get ourselves a little bit of follow through here this morning. And hopefully, right, take advantage of any kind of oomph. To the downside here, right, we're looking for rejection at that trend line. So 25.50, right, realistically. And then a breakdown towards sort of 2,400 and then beyond. Make sense? I'll take that as a yes. All right, cool. Crude, what's the count here? Lower low, higher high. Opening up in the implied middle, right, of yesterday's range. Yeah, so we look at setups on the 3, 5, 10, and 15 min time frame. Just depends on, basically just looking for the first short-term time frame to give us a setup that matches our daily plan. So we'll cycle through those during the day here, Jay. And yeah, we'll break that down as it's kind of coming together. So yeah, Jack, spot on, right? 1 for 3 here to the downside. And so we're still looking, right, for that bounce off of 70. That still realistically is in play. That's where we've seen kind of the pre-market low here so far. And then a move towards like 72. Again, not too much changing based on these plans. And then to the downside here, right, a rejection off of 72, which is approximately where we saw yesterday get rejected. We could also look, right, to break down from there, back down towards sort of that 70 handle. So a little bit range bound here on crude. And we'll see if it can give us kind of a resolution at some point today. All right, Apple kind of reminds me, right, of the candle that we saw in NQ on Wednesday. And yesterday, right, we made the argument that potentially that could be a capitulation candle. But, you know, inside bar, right, we nailed that. Still hanging out inside of its range. So we're looking for really a resolution, right, for a breakdown under 227.75. And then we want to see this thing, right, break out over, you know, 237.50. Not too much changing there to the upside. Okay, Tesla. Yesterday's lunatic, right, post earnings. Huge move. Up nearly 22%, right, since the close the other day. So very, very impressive. A little bit of a gap down here. And this is a 2 out of 3 here to the upside with volume, right? Because it's gapping down. So we're looking for a retest inside yesterday's range, maybe like a 250 bounce. Or a breakout over 262. Right? And then to the downside here, NA in the short term. We need to get into that gap, right? Which if it moves $13... okay, sweet, but we're so far away from that here this morning. That's realistically not going to be a setup we're interested in. Okay, Microsoft. Not an inside bar here, right? 1 for 3. Huh. Wonder how much they paid for that graphic designer. So we're still looking for that 131 breakout, right? We had that dip buy thesis off of 420. Probably not as interesting here today, but still looks kind of like a trend line breakout here to the upside. Nothing there has indicated that strong bears are back in control. We've got earnings next week on Wednesday. So let's see if this thing's got some juice here. But again, right, it's got a little bit of work to do before we're going to call it trending PA. All right, AMD, inside breezy. I don't know why I said that. So we're looking for a breakout here over 190, right? That's going to be the starting point. Or, right, a high vol rejection basically at the trend line, which is like 188.50. Yeah, absolutely, Joel. Absolutely. Not many weeks where, you know, the market actually feels like it's a real job. This week definitely has felt like it's been one of those weeks. So nice to have hopefully a fun Friday here. All right, AMD. So red candle, decreasing volume, gap up, higher high, higher low. So week 1 out of 3 here to the downside, fine. Again, earnings on Tuesday, so we're trying to creep up towards that range. And maybe now at this point, right, a little bit of a trend line. So looking for a trend line breakout, called over 156. Right, or basically get stuffed at this trend line, right, and then break down back towards 150. So trend line rejection. Cool. All right, NVIDIA. Another little trend line bounce here. Right, inside bar, so consolidation on the trend line means that we're looking for a breakout above, say, 142.50, right? Or a breakdown here under, right, 137.50. So again, not too much changing here this morning after all that consolidation there yesterday. All right, Meta, lower low, lower high, big gap up, opening in the middle of Wednesday's range. But a little bit of a bearish failure there, right? You could argue that for sure. But if we're going to be bullish, right, we need to get over 585. That's probably pretty challenging for us to get here. Right, aka trendline breakout. Right, or to the downside here, a high vol rejection off of like 580 sets us back up, right? So basically trendline rejection. And we'll say room towards like 560, 250. Again, that's not really changing too much. All right. Netflix, inside bar, still consolidating inside last Friday's range. Pretty much a week of nothing PA. All right, so we're going to look for a pop above 765. And still no real easy bear case for me here until we break down into that gap, right, under 736. So again, a little inside bar here. And we're looking for a 765 breakout. And then to the downside here under 734, we'll call it. Okay, Google, red candle, weak red candle. Gapping up back up above the trend line here to a certain extent. So back into that Wednesday range. So week 2 out of 3 here with volume, right? And so we're looking for, he needs to get over that trend line, to be honest with you. And then a rejection maybe off of like 165 could put us back down towards 160. All right, and then VIX hanging out 18 spot 64. So maybe some reasons, right, to slow down here a little bit. We should still get a decent amount of volatility, but we've seen, quote unquote, an elevated VIX reading here, right, for the last week or so without a tremendous amount of follow through in either direction. So at some point, right, that top's going to blow off and we are going to get that big release day. But hopefully it happens here, right, sooner rather than later. In general, right, indexes look a little bit more tradable than maybe our individual names. So we'd like to see that consistent story sync up here pretty much across the board. If we don't get that consistent narrative, then it's going to be very challenging, right, for me to put myself into any situations and, yeah, kind of force myself to do anything crazy. So today, right, it's all about, making sure that I don't ruin my weekend here on a Friday. Don't do anything stupid, right, from a risk management perspective to kind of finish the week red. I have to do something really, really stupid for that to happen, so I don't anticipate that occurring. But just not feeling like I need to force something here today, right? And not getting tunnel vision on a market is going to be very, very important. If, like yesterday, we end up being a little bit range bound, then yeah, we can play kind of, range rejections from the highs to the lows, or from the lows to the highs. But we'll break that down here as things are coming together. And hopefully, right, we can kind of finish off the week with a easy breezy lemon squeezy. I don't know what the heck's going on with my head here today. And have myself a really, really strong day. Maybe it's because we had a nice Thursday night football game that it's like, oh, this is different vibes here today. So maybe that's the narrative. But let's set ourselves up here, team, for a great trading day. Let's put ourselves in situations where we're proud with our decisions. And if we control those variables well enough, then the P&L will just take care of itself. So looking forward to seeing what the market wants to give us. Hopefully we can get ourselves some nice action, find ourselves a nice win or two, and finish off the week with a bang. Kind of bookmark it, right? Monday was our biggest day of the week. And then it's kind of been, $500, $600, $300, right? Kind of bouncing up and down here for, Tuesday, Wednesday, Thursday. So let's finish off the week strong. Let's control the variables we can control, and let's have ourselves a fantastic day. Any questions here, team? Anything you want me to look at? Happy to break down some of those here now. Well, yeah, it's an inside bar, right? So it's a day of consolidation. If we don't see an impressive volume standard, Daniel, I have no reason to look to trade. If we see rejections and we get stuck inside that consolidation range, right, where it ends up being mean reversion, then I don't need to necessarily see a increasing volume standard, but it's going to be exactly like it's mentioned in the strategy docs, right? So on an inside bar, if I'm looking for an inside bar breakout, I need to see bigger volume than the inside bar. If we're going to play mean reversion and things are going to get stuck, then the volume doesn't necessarily need to be bigger than yesterday because we're anticipating that conditions are basically remaining the same, right? So if we're looking for a personality shift to get that trend day, yes, we need volume. If we're looking for that mean reversion and things get sticky and we don't see much oomph, then wouldn't expect that to occur on bigger volume than the previous day. So in general, right, I'm always going to trade the same way like that strategy document, right? So on inside bar days, last one here, right? 1 for 3 / inside bar, confirmation standard. Occurs on the first 5, 10, 15, or 30 minute candle that closes whatever, right? Fine. And then on a trend reversal lower, we want to see on basically bigger volume than we've seen here so far today, right? So it doesn't necessarily need to be the biggest of the day, but it needs to be back to that outlier. And we want to see that evidence of increasing momentum for that breakout. So all that information is going to be in this document. I would recommend using that as your reference point, as that is how I behave on a day-to-day basis. All right, guys. So I got 2 minutes here to market open. I'm just going to go make myself a quick cup of coffee. Spend a few minutes here visualizing a successful trading day. It's inside the Discord docs here, Don. In the strategy docs section, it'll be, or in the trading docs section, it's this one here from November 21st of last year, the strategy docs. So trading docs, strategy docs. All right, guys, we'll be back at it in a few minutes, and we'll jump on then. All right, AJ, yes, we've already looked at Amazon here this morning. We're looking for either a 190 breakout, so above this Wednesday's range, or a rejection right off of this trend line to basically gap fill and break us back down towards sort of 184. All right, so let's see how this comes together here. NQ, probably the more aggressive volume standard at open. Ooh. So let's see, we got 20 seconds here. We got 14 spot 1 versus 13 spot 8. So bigger on NQ here. ES 27 spot 7 versus 797. Ooh, okay, so just got above as well, right? So 28 138 versus 29 797. So both of these, right, slightly bigger volume than what we saw there yesterday. So in theory, right, we do have that volume standard in play to play momentum breakouts, right? We're arguing that we have now an increasing momentum standard, and now we're looking for a increasing volume breakout relative to the previous bar. This, right, based on the volume conditions that we've established here so far this morning, gives us the most flexibility, right, for us to look for trades. Does that make sense? And then crude as well, right? Ooh. I think we're going to be cautious. We're going to be patient. We've got some data here at 10. Nothing else really crazy from there. But let's also just contextualize, right, this week's price action. Not really been that enthusiastic. So we're going to be pretty chill here, right, until we get some sort of proven otherwise. And we've got plenty of space on these ranges, right? So like ES, for example, an 11.5 point range certainly gives us relatively easy risk reward kind of setups, right? So we'll see if that ends up being the actual reality. But no need to rush into anything here. And we're going to be patient. So someone was asking me what time frames we look at. Well, right now, right, we're looking at the 3-min time frame, as this is the first one that's most likely to give us, right, that increasing volume standard. The first 5-min candle just closed, right, 45 seconds ago. So this is probably a little bit behind. So for now, right, we're looking for this short-term time frame to match up with this bullish plan here at this point, right? And then if we get that look, right, we're targeting a move towards, okay, 2650 and then 2700. But no increasing volume here yet, so we're going to be patient. Pretty rare that we get increasing volume here on the second candle. So maybe on this third one here, we've got a chance. ES might be better in that context. CL, right, lower lows, but not increasing volume. So again, buying myself time here. Don't need to do anything aggressive yet. We're going to see how things come together. Pretty much a bull case across the board so far. So now, right, we're probably focusing a bit more on ES than NQ, as that's the easier tradable setup for now. Obviously, we don't have anything active here yet. We don't have confirmation of anything here yet. So we're just watching. Okay, so we're not going to get that likely increasing volume standard here. Same thing on NQ. Little inside bar. So we got an inside bar breakout here, right on the short-term time frame on increasing outlier volume. We're back in business here for a setup trigger. So now, right, we've got two tickers that we can look at with a reasonable amount of enthusiasm. CL's reversing, but it's not reversing low enough. So we'd like to see that reverse off of that 70 handle, or at least in that 70 range. Off of 71, not that appealing, right? And the reason it's not appealing is because we have no evidence of it basically bouncing off of 71 as like a key level. We've seen that 70 area, right, give or take a couple cents, right, 70.12, 69.80, right, 69.95, right, act as support here. So we know that on the daily time frame, that 70 zone has been a spot where bears have failed to sustain moves through 3 times. So I would rather look for dip buys off of that area instead of assuming that, hey, today is different or this time is different, and then jump into something that maybe isn't there. So again, patience, right? Not missed anything here yet. So NQ may be giving us an opportunity here. We're about halfway through that candle, about halfway up that previous bar, volume-wise. We could get that opportunity. ES, a little bit more work to do because we still haven't broken outside of that opening range, right? As just like a brief reminder, we're looking for a variation of this setup, right? So either today we're looking for that high vol breakout right now above the opening range. We don't quite have a version of that here setting up here yet. And what's been the theme of the market here this week? So if we're going to be, like say, splitting up our opening trading window into kind of like 3 categories, so 30-minute windows, how's it kind of been? Yeah, right. So like first 30 minutes, we've kind of been waiting for, 10 a.m. data or for Fed speakers to shut up. Next 30 minutes, right, we start to maybe get that like kind of resolution of a move, but the move is relatively short. And then the last 30 minutes, right, of that window end up being kind of back to chop after a slightly kind of small move. And then if we go back and think even on Wednesday, right, where it was that big day, we didn't really get that breakout or breakdown, right, to the downside until way in the afternoon, right? So kind of like around that lunchtime period. So what we've seen here for the majority of the week, right, has been kind of a slower moving market until we get that separation. And so right now, things are kind of behaving like they have here all week without really an obvious exception here yet. So again, we're back to watching NQ. Right, we're seeing relatively good tech strength here so far this morning. So talking about those consistent stories, everything is mostly green here, right? I don't see any exceptions of things aren't being green. So that sets us up, right, for that possible NQ scenario. Also sets us up for that possible ES. ES's volume looks a lot more pathetic though. So I'm going to be a little bit more maybe pessimistic about the quality of that setup. But NQ certainly looks like it should be bigger than any of the bearish volume we've seen here so far today. So we're watching this here on the 3-min time frame. I mean, could potentially also set up on the 5, but 3-min certainly seems to be giving me the much more impressive volume standard. So we know we can already start to map this trade out, right? 30 seconds to go. Obviously, we don't need to jump the gun here yet, right? But as is, we're looking at a stop loss at 547.50, targeting 649.25, right? Or 650. And ideally, right, we'll get this to behave like the aggressive entry technique. Because this pullback, probably a little bit too aggressive, right? Too aggressive to get the sizing we want. Okay, so now we know it has to be the aggressive. So definitely seeing a little bit of an elevator down, or elevator up. We probably don't want to seeing it pulling it back too much further below this like 74.50 area. So let's see if we can find support here now, and then we can look to time an entry. As is, from a say 98.25 to an 82.50, how many contracts would that be? 1 or 2? So stop loss will say 83.25. Yeah, it'd be 1. A pullback, say, under 95 would give you opportunity to buy 2 contracts. So at 99, it would be 1 contract. A pullback under 95 would be 2. Okay, that's a nice elevator. So we can see a tick-by-tick pullback into 599. So again, that would be a 1 contract position. And if we don't get the risk reward, I can't jump in here, right? So ES, giving us then the potentially breakout on the next candle here. So if we don't get that look here on NQ, we've got ES kind of setting up as well. So let's watch here. Slow pullbacks, what we're looking for. 599 or lower, right? 599 or lower. Okay, behaving well. Keep going slowly. And if I can't justify the risk reward, I will not take this trade, right? If I want a risky decision, I'll go to that seafood place that smells a bit funky. I'm not going to take that trade that gives me a disproportionate risk-reward ratio. Okay, and again, we've got increasing volume here, so if I get that opportunity, we can still reset this thing back up, right, for a move towards that 650 area. Okay, so for now, we're still looking for that pullback. Not anymore. Now we're looking for the aggressive entry technique again, see if it finds support. I don't know why that keeps changing on me, though. It's weird. Okay, so now stop loss would be 608.75. All right, see if we can get some support here. Okay, we're looking for elevator up and then a tick by tick pullback under, right, 618.75. We have not seen that elevator up here yet on this candle. So no reason to be aggressive. Okay, so now stop loss at 605. Even lower potentially. 602 now. So we want to see elevator up and then a pullback into 613.50. So 602 stop. Slow pullback here into 613. All right, and so this would be able to be 2 contracts here. You'd be risking about $420, right, with 2 contracts. So watching here closely, we're close, 1.5 away. And again, right, I'm making my entry timing binary. Either it hits under 613.50 or it doesn't. We got close there, but we didn't quite hit it. So no reason to pull the trigger, right? So again, only 5 points. That can happen quickly here. 10 minutes before data. So we have a little bit of time here. We sure don't have enough time to hit that target. You can be patient here. I wasn't fast enough to pull that little bounce on 612.50. Come on. If it doesn't give me a look here on the 3, you can also play this on the 5, which give me a slightly larger risk target here. The smaller stop loss. Stop loss would be 611. 611 on the dot. Again, still no elevator up above 2250. That's what we're looking for. And then a small, gentle pullback. So that's elevator. Let's see a little pullback here. Again, this could be 2 contracts. All right, guys. I am starting to look for an entry here. Ooh, maybe a little bit too fast. All right, again, now see if we get that pullback. Looks like it survived worst case scenario. Nope. Be patient. Be patient. Be patient. That was elevator up, elevator down. All right, now so we can get it. All right, guys, I am in. Average price $621.75. Two contracts. Stop at 611. Great entry, Mike. Or sorry, Jeremy. Great entry. All right, so we can get some more oomph here. Plus 400. Come on. Want to see this candle hold above 630 now? Come on, you can do it. Come on, break, break, break. Here we go. See if you can keep giving me some more follow through here. 800 bucks. Not a bad start here, team. Not a bad start. Let's see if we got some more juice. Come on. Here we go. Okay, we got a few minutes here till data drops, so I'm not going to hold this right until 10 a.m. I'm going to look to close this relatively quickly here. So next big pop higher, I'm going to look to get out of this position and take a $900 win. Right, so a pop towards like 650 is going to be my my close. See if it's got the legs. Okay, getting there, getting there, getting there. All right, I'm out. 47.25 exit price. And that's $1,000 win. I'll take that all day long. Let's go. Great start here, team. Great start. Nice work, Jeremy. Yeah, great start, team. Let's go. Nice work, Jared. Nice work, Gabe. Awesome. So again, right, only reason I want to close this, not because I don't trust this thesis, but I'm not going to allow myself to get algo whipped around as we creep up towards that market data. So as this thing, right, starts to get closer towards 10 a.m. on that decreasing volume, we're going to be very susceptible, right, basically to an algo flush crushing us, right? So I'd rather take that little win, close my P&L as the day is starting, right? So the day off with $1,000 win, you know, it's 5K across accounts. And that for me is very, very valuable. So, okay, probably left a few points here on the table, but with that decreasing volume, I'm happy to just take it where it was. And then now we're going to wait here for this 10 a.m. data, right? And then let this thing reset. If it's strong and we get a good reaction, then we know we can play a setup here towards 2,700. If it's weak, then we can start to look for rejections back down towards low of day. So great start here to the day. A nice little start to the Friday. And yeah, plan came together pretty much perfectly there. So awesome job, team. Let's go. Love to see the green all around. Fantastic. Excuse me. Honestly, that felt pretty calm the whole time, right? We were green pretty much right away. We saw a little bit of a pullback. Timing was pretty close to perfect. And yeah, okay, maybe left 100, 200 bucks on the table. But I know from experience how disgusting algo flushes can be here. Oz, you got to get your timing right, man. Nice work, Jen. Congratulations. And honestly, team, I love to see you guys having bigger P&L than me. Love it, right? So this is what we were paranoid about, right? This little algo move that might be happening here. And the amount of times I've set up algos going into 10 a.m. data, working institutionally, just to steal the easy money. So let's see how this reaction is, but we're in good shape here. And again, right, this pop, that's an element of luck, not an element of skill, right? So now that that 10 a.m. data has dropped, we have an opportunity to reset this play, right, and target it on a different time frame. Nice, Jeremy. I'm glad to hear that you're adding some extra tools here. So let's see here. You know, it's like I said, right? If the trade is strong, it's going to give us multiple chances to enter. If it's not perfect, right? We don't need to waste our money chasing suboptimal price action. So in this context, right now we're targeting a move towards 2,700, our next breakout target. But let's see, right? I'm not in a rush to trade this. It's a great end to the week. Talking about all week how I want to have that, you know, calm, stress-free, nice trading day. So far, so good, right? So I don't need to be hyper aggressive looking for something when I've already gotten what I've been like saying is the holy grail here all week, right? Okay, so now we can reset this thing back up. Looking for a tick by tick pullback into 660.25, sorry. So 13-point stop loss, right? That's too much now. ES can't do it, right? Not outlier volume. 3 min, not outlier volume. So what we might want to see here, I got tongue twisted by myself. What we might want to see here now, right, is a breakout above 2,700. And then we can look for a pop towards 28. So, okay, we didn't quite get the opportunity we wanted, right, for a move. Risk reward wise, doesn't make sense to chase this candle. But Great start to the day here, team. Great start. And again, I do not care that this is now 690, right? When I closed it 40 points earlier. Honestly, doesn't make a difference to me, because this reaction I can't predict, right? How price action reacts to data or news, or the amount of buyers or sellers that shows up, is an element of luck versus an element of skill. And I just did not have a big enough buffer, right, on that position to be able to justify holding through that basically algo reaction. So don't give yourself FOMO here thinking, oh my gosh, I would have made an extra $1,000 or $2,000, whatever it is. Because the next time you try to do that, you're going to lose all that money on that trade anyway. And so don't get caught up in that BS. Right? If the trade is strong, it'll give us multiple chances to enter. If the trade is weak, then we did a good job, right, protecting our profits. Is that fair? Right? So we cannot torture ourselves for following our rules. And we did a good job there following our rule, right? Holding through data, not only is it going to be, for some people who work with prop firms, right, is it's going to actually, they're going to reject that payout, right, if it happens. Like Apex, for example, right, they don't allow you to trade through market data. So don't hold yourself, right? I mean, it's a good breakout here. I wouldn't say it's too overextended personally. We would argue that it's overextended once that volume disappears, right? So once we start seeing that we're making higher highs on a decreasing volume standard, then it's overextended. Right now, we don't have an active setup trigger through that 2700 because it hasn't been able to break through that zone. So if we then get like a high volume rejection or something along those lines, yeah, we could absolutely start to make that argument. But short term, our volume is telling us that, hey, we've got a lot of enthusiasm left here. Right? I'm judging extension based on volume, not on my feeling of price action, right? Yeah, 100%, Gabe. That's exactly it. Right? Now we need volume to match up with our setup trigger though, right? Because we don't have a setup trigger here on this 5-min time frame, right? We've seen it get stuck under 700. So now we push on, right, to the 10-min time frame, look for a breakout and hold above 7 for a trigger towards 28. So if we now start to get more and more contextual clues that that 700 area is acting as resistance, then we can maybe start to argue that this volume is capitulation and we can look for reversals. But I judge, right, how extended a market is not based on my feeling, right? Because my feeling is I can't trust intraday. I use it based on volume. If I see a lot of buyers still supporting a thesis, breaking through my levels, giving me volume through those levels, then that is objectively telling me I have momentum. If I start to see rejections here, right, or higher highs like volume divergences, right, then I can start to make the argument that hey, I'm out of momentum. But for now, right, that was the second biggest volume bar of the day. So we know we have enough participants to continue to have some range. Now we just need cooperation with the setup trigger. If it fails here, right, then we can start to look for maybe a reversal setup back down towards low of day. And then we know we've got momentum to the downside. So the reason, right, why we trade our system is we want to remove that emotional attachment over the reaction to price action. Because price action can remain irrational longer than we can stay solvent, right? So if we can just basically define what those criteria are, yeah, but that's fine, right? If the initial pop is driven by algos just buying the headline and then you continue to see that narrative supported, I don't need to overthink it, right? The reason that you want to avoid that algo move is because going into data, basically orders get pulled from the market, right? So when orders get pulled from the market and then algos go in and execute, the bid ask spread, or like the depth of the order book, is a lot less. So you get a dramatic amount of volatility because they're just firing out market orders that are hitting at like crazy ranges. So if you then see those orders get filled and volume supporting it, that's actually a sign of strength, right? Well, you care about the algos because they can execute orders faster than a human can. And they're going to be basically saying, okay, I'm going to buy a market order at 25.55 or whatever it is, right? And it's going to eat up all that volume. And so it just flushes really quickly versus, being anything else. So eating up all those kind of weak orders and then sustaining follow through isn't actually a bad thing. So that's really all algo price action is, right? Is it's just a faster way of executing market orders. And then it just like gives you really bad fills on your stop loss, right? Flushes through and then bounces back quickly. Does kind of like funky stuff like that. Versus necessarily introducing a tremendous amount of volume. So it's just on the headline, right? Order book is going to be pretty thin. And so the algos will take advantage of that and then push it. That's what we're afraid of. Does that make sense? Yes, no, maybe. Okay, so we're probably not going to get a 10-minute setup here, right? Now setting up potentially now is a 15. So either a 15-min breakout here above 2,700, right? Or we end up getting a, most bearish, second most bearish, normal body bearish rejection candle here for a breakdown back down towards where the lows. ES also struggling around that psychological level. So we've got similar setups here where both tickers, right, aren't giving us a hold of that psych level. So no real easy basically setup trigger, right, to those secondary targets. So for now, right, happy to sit on my $1,000 day. Don't need to do anything more aggressive than that. And just keep stacking up to what's been a great week, right? CL not moving, so no focus on that here this morning. It's primarily an index day here. So ES got to get above 5,900 and Q got to get above 27. So nice green day here. Feels awesome. Hopefully you're all feeling good as well, right? It's been a challenging week. So finishing off with a nice win, walking away, wouldn't necessarily be a bad thing either, right? Okay, so now we're possibly setting up for that rejection thesis here. Needs to go increasing volume, and we need to close as a red candle. Nice work, Jeremy. Congratulations. 2,300 bucks, almost 2,400 bucks is fantastic work, man. 10K a month pace. Cannot complain about that. It's 100K a year, dude. Congratulations. And the fact that you did nearly 2,400 bucks in what has been a very challenging market tells me that your risk management is incredible and that you're taking on the lessons that you're learning here. So from my perspective, Jeremy, you just put a huge smile on my face, man. All right, so we do have that increasing volume, but we need to see this thing break and hold under, looks like 650, right? So 30 seconds to go. Ideally, we're going to want the aggressive entry technique here because a 50-point stop loss or a 40-point stop loss, right? Too big with its sizing. That'd be risking $1,000 per contract. That's too much. So let's see if it can close under 50. 15 seconds to go. Looks like it might not. So didn't do it. This is maybe setting up as like that fake out entry technique here on the shorter time frame. So we'll see if that ends up happening. But now, right, if you get that proper fake out entry, you should be able to get the risk reward. We need this candle to close green, but you then be able to get, 14 points of risk for 35 points right of return. That would be great. But again, we need to see this candle close green, right? Do some sort of indication that bulls are back in control. A little weak pullback post sell-off isn't necessarily a bad thing. And then making that lower low and not being able to sustain that move also tells us, right, that bears aren't particularly strong here yet. So let's see here. Might have a chance. And so for those of you who are DTR guests, right, this is the benefit of being inside the stream on a daily basis. You know, maybe you have access to the setup alerts channel in the Discord, things along those lines, but you get a lot more color intraday, and you're actually able to get the same entries, right, as we're getting here on a daily basis. So if you actually want to maximize your alpha and you want to get a tremendous amount of P&L potential, the best way for you to do that is inside the daily live stream. Nice work, Jen. Congratulations. Okay, so again, right, possible fake out scenario could be in play here. Let's see how this behaves. So stop loss at that fake out, right? 2 fake outs lower under our confirmation candle. Let's see if it's got it. Again, we need to pull back into like 54 or lower, and then just watching this reaction is going to be very important here. No front running this, right? No doing anything stupid. Don't need to give away a green day. So stop loss would be 40, 50. And an entry under 54. Right? So my limit price right now is set at 54.50. And so I know, right, that would be a 1 contract position. You're risking about $280. Right? If I get a deeper pullback, say by 653, okay, now I can buy 2, right, and still be within that $500 range. But if I don't get that pullback, I don't care. I don't need to be too aggressive here. Don't quite have that pullback scenario there. And this maybe looks better on the 10 than it does on the 5. And then if this thing breaks out over 700, right, then we have still that setup trigger for a move towards 28. We need to see that happen, obviously, on an increasing outlier volume standard. So it has a chance for sure, but needs to hold above 27 on volume. We have a chance to get there, so we'll watch this, and then we can target a move towards 2800. Okay, so we have a chance here. Good volume. Bigger than any of the bearish volume in this pullback, right? That's a good sign. See if it can hold above 700. If it can't on this time frame, right, we'll switch to the 5, right? Or alternatively the 10. So that closed at right at 7. I think that's probably a pass. Just wait it out. Just under 900 close as well there. So I'm going to wait 5 minutes, see if it can give me that pop above. And if it doesn't give me on the 5 min, I'll look for it on the 10. So didn't do it on the 5, right? So no active setup trigger here yet. Now we're going to wait for this on the 10 min. Where'd you get that 641? Like towards low of day? I mean, I don't have a setup trigger here yet, Oz, to the upside. right? So it needed to hold above 700. It couldn't do that. So no active setup trigger here, right? So maybe on this 10, maybe on this 15, we can get that. 15 is probably not going to give me enough volume. 10 will be close. Again, still looking for that 700 hold. Yeah, it is. We've seen a couple attempts here to struggle at it. So very important that we hold above it, right? False little move above, little tails above. Just tells me it's not ready, right? So we're making it ES also struggling at that 5,900. So both of these are like just a little bit stuck. So now, excuse me, we're going to look for a breakout on the shorter time frames again. Again, right? Looks like a little bit of a rejection without really getting separation above or separation away. So at this point, right, 10:33 in the morning, honestly, I'm not sure how motivated I am to keep trading this, right? Because I'm not seeing really any clean bit of price action here at these levels. So I'd much rather, right, take a nice green day, bookmark the week with a fantastic win, and not feel like I need to do anything else, right? Like, we've kind of just been stuck, right, since we hit that 700 range. Right? No real movement in 10, 15 minutes. Yeah, a little bit, Gabe. It seems like there's a wall of sellers at that 900, right, and 700, but not a big enough wall where it can push below or really give up and break out above. And just the time of day here now, too, right? You know, we've talked about the statistic many times before in the past, but expecting, right, consistent higher highs past 11 o'clock generally doesn't happen until sort of like that power hour time frame. So now, Sammy, I mean, you talked about that feeling of overextension. Well, now you're getting closer towards that feeling, right? Yeah, have a great weekend too, Jared. Can't answer that, to be honest with you, Dwayne. I'm not really a part of their approval process or had any payouts denied. But that is one of their rules, right? So, you know, doing trades or making trading decisions that are counter to the rules certainly sets you up for that risk. It's one of their rules. No trading through data. All right, I think it's time to just fill in the journal. Can't see myself placing any further trades here today. Have a good day, Dwayne. I'd love to hear that, Joe. It's what we're here for, right? Honestly, like the reason why I became a successful trader was because I sat down next to someone who was willing to honestly be really honest with me, right? Give me direct feedback, hold me to a high standard, and to be just fully transparent. And I hope that's the service that I provide to all of you on a daily basis. I promise you, feedback is never personal. It's never attacking any individual. It's about helping you basically just maximize your P&L and your potential so you can achieve everything that you want. So, Joe, I really appreciate you saying that. You're going to be able to accomplish absolutely whatever you want here. It's up to you. And I'll be there to support you, help you, show you what I'm doing, and really scale up those trades so that we can create that next step, because that's when it gets really fun. So awesome week here, team, right? Awesome week. We're at what now? 11 days, right, in a row green. And we had 18K on the week, right? Cannot complain about that. That's a pretty good week. So P&L sitting at all-time highs. Can't complain. There we go. It's looking good. Nice work, Oswald. Yeah, good to kind of scale back into it, right? It's not been an easy market here this week. Today, a little bit of an exception. We've had to fight for every dollar, right? I would say no, Jay. For me, right, the strategy itself is not that complicated. Like, I don't think any strategy fundamentally is that complicated. What is hard about trading in general is getting good at learning how to trust yourself, right? So learning how to trust your risk management, learning how to trust your entries, learning how to trust your risk reward techniques. And those are the things that I think are challenging to learn. The strategy and learning the intricacies of it is more just a time thing, right? You see enough examples, you execute a few of them yourself, and then you'll be able to put it all together. But it is the doing things in the right order, right? Doing things in the right process, following the risk management rules, right? Not chasing trades when you miss them, not succumbing, right, to bad habits. That ultimately makes you profitable. So for me, right, that's the most important thing. And the reality here, Jay, I mean, you've seen the powerful comments, right, from everyone and, how they see it and, their P&L and things along those lines. So if they can do it, right, you can do it. It's got nothing to do with an individual level of skill. It's the applying things to your personality, getting that accountability, right, to actually being able to scale up those ideas that ultimately makes you profitable long term. For sure, Joe, or for sure, Steven. I hear that, man. Hell yeah, Mike. Hell yeah. So for me, right, the way that you overcome, right, some of those pain points, Steven, right, is it's trust your technique, right? Create evidence in your trading journal that, hey, when I behave like I say I'm going to behave, you're going to do very, very well. But it's when you start to like deviate to those bad habits and you start to chase trades, well, if you track those data points enough, you're going to start to get enough undisputable evidence that it just doesn't work, right? And then once you identify those forks in the road and you're tracking them deliberately, you can start to notice those patterns and behaviors and how to basically fix them and change them so that they stop becoming basically significant problems. Appreciate you saying that, Alfred. Catches up every time. Yeah, it feels good in the moment. But what feels good in the moment is rarely what's best long term, right? Like, getting comfortable in delaying gratification is one of the hardest things to learn as a trader. And I think it's one of the biggest differentiating factors between those who are successful and those who aren't. Because everyone can make money when the market's ripping higher. But it's how well can you protect your money? How well can you still fire that shot, right, when things haven't gone your way? How well can you trust your system when, you have that drawdown? And then just surviving through that, right? Reinforcing that confidence. That's what makes you green, right? Yeah, you have a great weekend, Gabe. Well, I appreciate you saying that, Mike. To be honest, I'm very committed to all of you being as successful as you want to be, right? I'm all in on this. I don't know how to fake it. And to be honest, trading is my favorite thing in the world. It's absolutely my favorite thing I do. I've been obsessed with this game from the very first second I walked onto a trading desk. So for me, I feel incredibly lucky that I get to share this passion with all of you. And I just know how much more fun it is when we're all kicking ass. Sorry to curse. I've been trying to work on that a little bit. But for me, that for me is the best feeling. Hell yeah, Mike. That'd be fun. I know I've talked about it a bunch. Once I get my visa sorted and I'm in the States full time. So there's a couple ways to talk about scaling trades here, Joe. So one of them, right, would be using the pyramid trading technique. So when you get big follow through, we haven't had really many of these examples here recently, but when you get big follow through and you're able to get some good action in the market, we have a way of trading where we can increase our position sizing while always making sure that we're not ever increasing our trading risk. So that's one element of it. The second element, right, of basically being able to scale your trades is that once you pass your funding evaluation, getting a second account or getting a alternative or more funding is really just a replication of continuing your same technique. So instead of having to take 10 trades, you can take one trade on 10 accounts and scale up your P&L in that context. I personally don't, Jay. I do all my analysis here on TradingView and have been using this exclusively for my charting software, things along those lines for the last like 6 years. No worries, Steven. No worries. Truth be told, my memory's all over the place with these names because I see different names on our Zoom calls, different names inside the YouTube chat, different names inside Discord, different names on people's emails. So it's never a surprise to see something new. Let's put it that way. All right, guys, any other questions here? So we try to do group calls generally like Wednesdays post stream, Don. But if you ever want to chat to me, right, you've got access inside the Discord to one-on-one calls. So we could just do it that way. So Jay, I mean, I personally use everything on TradingView. You know, there's a bunch of different, like I do all my analysis through there. So I've got 3 screens. I talk about this a lot, but I've got 3 screens. The one that you guys can see here, which is my charting. And then to the right and kind of above, I've got 3 charts. Kind of just depends on what the hot name is. So I'll either be ES, NQ, or CL up there. And then below that, I've got my OBS, the YouTube chat, which I'm reading. And then I have my Top Step X accounts where I execute trades. I have a My Funded Futures account in there. And then I have my Interactive Brokers where I'm executing trades. So I personally do all my analysis on TradingView. And then I have like a various way or 3 different ways that I basically execute trades. So it's a little bit messy on my right hand screen, but for me, I mean, it's just a buy and sell button, right? That's really all it is. All right, any other questions here, team? Any other questions? Yeah, sounds good, Steven. Enjoy your weekend, man. I mean, the way that you'd want to do it, Joe, is to make sure that you have YouTube Premium so that you could listen to the stream in the background when you're executing trades. I know multiple members do end up doing that. Personally, I don't have much experience executing trades from mobile. It's not something I've ever really done. I've always been in front of a computer when I trade, but it is 100% possible, and I know people do it. So in general, with these execution platforms, right, it's just about building up that level of confidence with it so that there aren't any operational mistakes. And then once you get that down, it's like I said, every platform, mobile, computer, iPad, some sketchy Android, North Korean tablet, they're all going to have buy and sell buttons, right? So from a functionality perspective, setting up orders is like not really technically complex. It's just making sure that you have like you can still listen right to the stream when you're switching between windows would be the really thing to work around. So yeah, Jeff, I agree. It's been a great week, right? All things considered, been a great week. And yeah, I think we saw the market pretty well here today. Even like this rejection, it's not really happening on a significant amount of volume to play like a mean reversion towards low a day. So, think we caught the move. Maybe closed it a little bit early, but I won't complain about that. All right, team. Final call for questions here. Final call for questions. Not sure actually, Bert. Not sure. I don't really track that, to be honest with you. It's got to be close. I've definitely had a few opportunities or a few times where I've had just like, I'm pretty close. So this has got to be longer. So that's 17 green days. Yeah, so it's there. I've had a few like nearly perfect months. Those are the best. But after like a little bit of some drawdown, right, a little bit of a challenging market there for 5 or 6 days, focusing up, bouncing back, right, making new all-time highs in the portfolio, clearing through them with some conviction. That's what feels good, right? So essentially the win streak itself, it's that just come back, you get your ass kicked a little bit, you recharge, you reset, you trust the system, right? And then your basically risk management, your risk reward rules, they work, right? And so it's getting that reinforcement that those techniques actually work long term. That's what feels good. The only thing that's inevitable in trading is that your next losing day is around the corner. So just powering through that, right? And building up, it's important. And yeah, once you lose that mental capital, you're done for. So just being honest with yourself, right? Realizing that, hey, sometimes you need a break, sometimes you need to take a long weekend. You come back, refresh, recharge, and then you make your money again. So trading is one of those jobs where you constantly just have to be present in the moment, right? And hold yourself to a standard. that most people would be unwilling to hold themselves to. And when you do, great things happen. When you don't, you kind of get your butt kicked. All right, team, final call here. Final call. I don't know how many times I've said that now. All right, team. Well, if no further questions, I'm going to kill the stream here for the week. Have yourselves all a fantastic rest of the weekend. Be back at it on Monday here to keep kind of building up and compounding and stacking up those nice wins. But let's have ourselves a great day. Let's keep building up some of these processes, and let's keep focusing on the variables we can control. So congratulations, everyone who had a green week. Stoked for you all. Very proud of you all. And let's keep kind of crushing those goals. For those of you who are DTR guests and joined us here for the week, thank you very much for tuning in. Hopefully you learned a lot and you saw enough that you decided you want to be a DTR member for life. I'm telling you, it's the most transparent and profitable trading group that you're going to be able to find. So looking forward to working with each and every one of you. Know that we can start kicking some serious butt. And yeah, feel free to reach out to your advisors who will set you up and get you started here with next steps. So appreciate you all. Have yourselves a great rest of the weekend, and I'll see you on Monday. Peace.